Hello traders, welcome back to new video in our exciting series. I am Sanjay from Tribe International and I am thrilled to continue this journey with you. Tribe Hub where financial empowerment begins. This session is powered by Tribe Hub, a place for all financial education, an initiative by Tribe to empower traders with knowledge, tools, and community support to excel in the financial markets. Today, we are diving into an exciting topic that can significantly impact your trading strategy: news trading. We will explore how to trade market events in forex market, whether you are a seasoned trader or just starting out. This video is for you. Video part 1. We have divided this video in two parts. First part, we will be focusing on basics of news trading, understanding what are major market events and how they impact currency prices. So let's get started. What is news trading? News trading is a strategy where traders make decisions based on news releases and market events. These events can cause significant price movements in the forex market, creating an opportunity for profit. It's crucial because major events can lead to increased market volatility, which can be both an opportunity and it can also be a risk for traders. So we need to be carefully aware of its factors and its impact. So news trading involves monitoring economic reports like monetary policy, central bank rate decisions, or any new policy coming in. It can be political events like elections, change in government, etc., or other market moving news. It can be war news or any natural disaster or any big news that can impact the economy as whole, and using all this information to make trading decisions to benefit from its movement. And in forex market there are a lot of information flowing in, so we need to be careful in selecting which have only high probability and high impact opportunity. Major news event can leads to market volatility, alright, so which can be both an opportunity and risk for traders. Let's talk about some examples of major market events that can impact the forex market. There are many events happening around the world, and keeping track of all of them manually is beyond a individual's capacity. So to simplify the routine, you need a good economic event calendar, and in that you need to filter the high impact news event to reduce the noise. So let's see these market events one by one in detail. First news event we are going to evaluate is interest rates. Interest rate decisions are one of the most important economic events that impact forex markets. Central banks like US Federal Reserve, European Central Bank, or Reserve Bank of India announces their decision about interest rate on specific dates. Now, what will be the impact? Higher interest rate attract foreign capital, leading to a currency appreciation. So whenever central banks increases interest rates, the currency rises. On the other hand, lower interest rate tends to weaken a currency. So whenever central banks cuts interest rate, currency depreciate because it discourages investors as they are getting low returns on their investment. But this general rule is not always true. That is why we need to check other factors also, and you cannot rely solely on this general rule to trade in the forex markets. Recently, Federal Open Market Committee, the central bank of US, cuts the interest rate by 25 basis point. So what did this impacted on the Euro USD chart? We will see that. According to this general rule, the currency should decline, means US dollar should decline because interest rate is cut down, and that will gonna discourage the investors. But actually what happened, let's see on this Euro USD 1 day chart. On December 18th 2024, the Federal Bank reduced interest rate by 25 basis point, bringing it to a range of 4.25% from 4.50%. This move was accompanied by indication of slower pace of reduction in 2025, means that they are going to be very cautious in reducing further interest rate, and they were projecting only 2 quarter point cuts next year. So this addition of one single line that they will be a little bit cautious made the US dollar strengthened against other currencies, and US dollar reached 2-year high. This appreciation has contrasted with the general market guideline of interest rate trading, and instead of decline in US dollar, it did the actually opposite, and it strengthened, and it put a lot of pressure on Euro USD pair. Despite the Fed's rate cut, the dollar appreciation caused the Euro USD to decline, with the pair trading around 1.03 level. This movement reflected the market reactions to Fed's signaling of more measured approach to future rate cuts. So that is why we need to be extra cautious in following those general guidelines. And what you have to do is, if you just look at this chart, what happened here, the Euro USD was in a very strong downtrend in the past, and before the interest rate decision it was trading in a very tight range. It was just going to be a retracement, and here you can see at 1.04 it formed a very good support level. Okay, and on the day of interest rate cut it broke down this support level, which continued its previous downtrend. So here you see the interest rate cut should have increased this pair, but instead of those cautious measured moves it declined. So the market was in an expectation of interest rate cut, which was already discounted into the price, and it got reacted adversely because they are going to give a fewer rate cuts in the future. So that is why you need to include the current market trend plus the fundamental factors in conjunction, and then plan your trading opportunities. Second market event is GDP, Gross Domestic Product. Gross Domestic Product measures the total value of all goods and services provided within a country over a specific period. Let's say if our GDP is growing by 6% in a year, then you can measure it in percentage term by 6%, and the specific period is 1 year. So what it is measuring is all of the goods and services are produced and consumed in a country, or it can also calculate for exports. A high GDP indicates a strong economic performance and can lead to currency appreciation. On the other hand, if the GDP is indicating a decline, then the overall performance of our economy would also be obviously declining, and that will result in a decline in its country's currency. So here you can see the data as a forecast which shows that GDP growth may rebound to 6.5% in quarter 3. So to be specific, there are two types of GDP datas. First is annual GDP, then second is quarterly GDP. and all of these data are published by statistical department of each country. You can see here in the economic calendar, it shows that the GDP is increasing, and it is the news that shows Japan economy is likely to keep growing at pace above its potential growth rate. So we are having a good forecast for Japan's economy, which has resulted into currency appreciation. And if you look at the trend of this chart, it was in a uptrend for the short term. As of now, it has crossed above its major EMAs like 200 EMA, it is trading above 50, and also 20 and 5 EMA. So you can see when this news came in, there was a range bound market going on for the last 2 days. Before 2 days, you can see a very good uprise in its currency. So it has formed a very tight range for 3 days, and technically you can enter on the breakout of this minor range, or if you just move down to a little lower time frame, then you will identify it as a channel movement. So typically it hits this support zone, it tested the 50 EMA and then move up to the upside with the combination of fundamental event, which is rise in the GDP. So this is how you can trade these fundamental events on the GDP forecast too. There are many GDP forecasts coming into the market on several currency pair from time to time. So you can keep track of these events from the help of economic calendars, and you can view their previous data, forecasted data, actual data, and in combination with technical analysis to identify best entry prices. Here we are using TradingView for comprehensive view of every currency pair. So you can see on the right hand side we are getting the latest news events, and on the left hand side you can also see its chart simultaneously. That will gonna help you make trading decisions quickly. Next is inflation rates. Inflation rate, it indicates the rate at which the general level of price for goods and services is rising. If the inflation is too high, it shows purchasing power or the value of a particular currency is declining. And if the inflation rate is too low, then it can also lead to discourage the economic growth. So that is why economic experts have suggested that a country needs to maintain moderate inflation that can be very healthy for economic growth, while central bank and government should take periodical measures to keep it maintained at a certain level. Otherwise, if the inflation rises above the certain threshold limit, then it could crack the economy, and that will gonna reflect in the currency's prices also. So that is why high inflation can also weakens the currency, and very low inflation can also weakens the currency. Let's see with an example. This is British pound versus US dollar chart on 30-minute time frame, and you can see we recently got this event published which shows that the inflation rate year on year data on 18th of December. So it forecasted at 2.6%, and then the previous data shows that it was just 2.3%, and when the actual data released, it came out to be 2.6%, which is unchanged from the forecasted data, but it is higher previous data. And on the chart you can see we were in a downtrend, and then we rallied to upside towards 200 EMA on this 30-minute chart for a pullback. And what happened, it went into this tight trading range here, and it also broke down this trendline support area. After this range bound movement, the data came out and it matched the forecasted data, and forecasted data was factored into the prices a little bit before. What happened if the inflation data would have come down to a little bit lower than what we have forecasted, what the market would have expected, then the prices would not have been able to correct this much. But the data says something else. So here, when this support broken down, it gives a very good entry for short and momentum down move. So this is how you can also track for inflation rates data and plan your entries accordingly. Make sure you keep track all of those factors that I have mentioned to you in the interest rate decision. And what are those? Like trend, and is there any other data coming in? So technical factors, all of these things you need to consider it. Now employment data is also very important. So what does employment data shows? It gives you metrics like unemployment rate, non-farm payroll, or layoff data indicating the health of labor market. As you can see here, the jobless claim 4-week average, it shows that we were declining a little bit, and now the forecast shows that the actual data should be a little bit above than the previous data. So it could lead to depreciates its currency a little bit, and there are several kinds of data as I mentioned: employment rate, non-farm payroll, jobless claim, layoff data. So each and every data have different kind of impact on its currency pair. So you need to have a thorough guide in trading them. So the impact is strong employment data often leads to currency appreciation as it signals economic strength. As more and more peoples are getting jobs, they will gonna spend it in the economy, that will gonna result in increased economic activity, and that will gonna boost the economy. Next is trade balances. Trade balance is an important type of market event that directly impact the forex reserve and the economy as a whole. This data shows how much surplus country have or how much deficit it have been in. So trade balance simply shows that how much a country has exported and how much it have imported. If your export is higher, then the currency will appreciate because you have attracted higher inflow of foreign funds. And if your total imports are higher, then it shows that you have paid higher foreign currencies. That will gonna impact the foreign reserve of a country, and that could lead to depreciate the currency. So let's see the example of balance of trade. In Japanese market, it shows that the forecast and the data was in a very high deficit, since 688 billion was the forecast and the previous data was just at minus 461 billion yen. It's deficit and it is negative data. Alright, but the actual data came out to be very good in terms of forecast. So whatever the market was expecting, the actual data came out to be a little bit good. The deficit is very low. So in comparison to the forecast or in comparison to the market expectation, it is good. So that would gonna lead to a little bit of currency appreciation in Japanese yen. You can see this US dollar versus Japanese yen chart on 1-day time frame. On 18th of December, balance of trade data released and the currency appreciates for 2 consecutive days. So here earlier on charts also we were seeing a upside trajectory in its currency pair. Video part 2: Political events and natural disaster. Political events such as election, policy change, along with natural disasters can create uncertainty in market. Traders often react to this uncertainty by adjusting their positions, will lead to volatility, and you can use that particular volatility for your benefit by identifying some good trading opportunities. As you can see on this USD INR 1-day chart, Here, on the day of 4th of June, the election result day, there was a lot of uncertainty going on that which government is about to come into the power. So on that day, the currency of India depreciates a little bit, and we have seen a very good spike in its price. As you can see on the chart, it's marked in this green box. So this is how you can trade political events. There are some more political and natural events that can leads to some volatility. So what are those? Let's see it. Political events refers to significant occurrence in political landscape that can influence the economic and social environment of a country. These events often have the power to impact the financial markets, including the forex market. Here are some common types of political events. So first is election and political stability. National, regional or local election where new leaders or representatives are chosen. These elections can create uncertainty in the market, especially if the outcome is unexpected. For an example, a change in government can lead to new economic policies that affect current values. Second is policy changes. Government declaration about change in fiscal policy, monetary policy or other regulatory measures. These policy changes such as tax reform, adjustment to interest rate can significantly influence the investors' confidence and currency values. So that is also need to be tracked. Third is legislative changes, passing of new laws or amendment to the existing laws that impact the economy. Legislative changes can affect the various sectors of economy, leading to shift in currency demand and supply. Fourth one is scandals. Political scandals. Events involving unethical or illegal activities by government officials or big political figures. This can undermine the confidence in the political system and economic stability, leading to currency depreciation. Then trade agreements and disputes. Negotiations, agreements or disputes between countries regarding trade policies and tariffs. Trade agreements can boost the economic growth and strengthen the currencies, while disputes can create uncertainty and weaken a currency. So that is also needs to be tracked closely, and that will gonna give you wonderful opportunity if you look at the right place. Then geopolitical tensions, conflicts or tension between two countries such as border dispute or military conflicts. These can increase market volatility and lead to safe haven currency movement, whereas the investors move their fund to more stable currencies. So if there is high tension going on, then investors might move their fund to any other country's currency. Then shift in power, or you can say government stability. Ruling government is changing, or there is a no confidence motion is in effect that can impact the economic confidence. Political instability will depreciate the currency due to high uncertainty among investors. So this is why these political events needs to be tracked very closely for identifying trading opportunities in them. Let's see an example of political event. 2024 US presidential election. The election saw former President Donald Trump running against Vice President Kamala Harris. Before the election, there was uncertainty. Leading up to the election, there was significant uncertainty in the market. Investors were cautious, leading to a weaker USD as they anticipated potential change in economic policies depending on the election outcome. During the election, as result started to coming out, the USD experienced volatility based on perceived likelihood of each candidate. For instance, when Early result showed up Trump leading, the USD strengthened due to his pro-business policies. After the election, Donald Trump won the election, becoming the second president in US history to serve non-consecutive terms. Following the confirmation of Trump's victory, the USD saw a significant boost as investors anticipated a continuation of his previous economic policies, which were seen as favorable for business and investment. So let's see this on the chart, what it had impacted on Euro USD. Immediate reaction: Euro USD pair fell as USD appreciated against the euro. Investors moved their fund into US dollar, expecting stronger economic growth and higher interest rate under Trump's administration. So the long-term effect was the market continued to adjust to the new political landscape, with USD maintaining its strength against the euro as Trump's policies were implemented. As you can see on this chart, we were in a good downtrend earlier in Euro USD. Then we rallied a little bit before the election result. We rallied a little bit, and there is some good volatility. Okay, and the rally was towards the 200 EMA and 50 EMA resistance level. Then on the day of result, the euro US dollar pair got hit badly and euro depreciated a lot in one single day. And after that, also after a little bit of profit booking, the currency pair continued its downward trajectory. So this is how the Trump election reacted the foreign currency, and it had strengthened the US dollar a lot. So you can trade these political events also in similar fashion. You just need to know the strength of the chart and the fundamental impact. Now, what are natural disasters? Natural disasters are catastrophic events caused by natural process of earth. These events can lead to significant damage, loss of life, and economic destruction. So there are some common type of natural disasters. Let's see one by one. The first one is earthquake. Sudden shaking or movement of Earth's surface due to tectonic plate movement. It can cause building to collapse, landslides, and tsunamis, leading to a significant loss of life and property. So these can impact economy as whole. So that is why anywhere in the world, if this kind of natural disaster is happening, you need to keep track of that in an anticipation for forex movement. Then the next one is tsunamis. Tsunamis are large sea waves caused by underwater earthquakes, volcanic eruptions, or landslides. It can cause widespread flooding, destruction, and loss of life. So that also impact forex market a lot. Hurricanes and typhoons, or you can say cyclones, they are powerful tropical storms with strong winds and heavy rain. So they can cause wind damage, flooding, storm surge, and affecting large coastal areas. Next is volcanic eruptions. So explosive release of magma, ash, and gas from volcano can affect the health of general public. It can damage the property, and it can also disrupt the air travel. Then next is floods, overflow of water, normally dry land, often due to heavy rain, river overflow, or dam failure. It can cause extensive property damage, disruption to transportations, lead to loss of life. Next is droughts. Drought can impact crop failures, water scarcity, and economic losses, particularly in agriculture dependent regions as India. If we are experiencing an extended period of drought in India, then the economy can get disrupted a lot, because majority of our economic activity is being contributed by agriculture dependent businesses. So that is why you need to keep track of these events and know their impact. The last one, wildfires, uncontrolled fires that spread rapidly through vegetations, often triggered by lightning, human activity, or drought conditions. So these all are some examples of natural disasters. That there are many more type of natural disasters are also there, so you need to keep track of those with the help of news. Let's see an example of natural disaster. Japan got hit by a severe earthquake and tsunami in March 2011. The immediate impact was that Japanese yen appreciated significantly against major currencies like the USD and Euro. This was due to repatriation of funds by Japanese companies and investors seeking safety amid the uncertainty. So, what do we mean by repatriation of funds? It means that big Japanese companies and big investors pulled a lot of invested funds from foreign they have invested, because there was a lot of uncertainty going on. So when they sold off their foreign investments, and this has increased the demand for Japanese yen, as they were converting their US dollars or euros back to Japanese currency. So that is why the Japanese yen increased a little bit in the starting. But what happened after a little bit of time, the market experienced high volatility as investors started to react to the disaster's impact on Japan economy and infrastructure. So the economic impact was a lot of infrastructure damage. The extensive damage led to a decrease in economic output. This initial economic disruption led to a decrease in imports and heightened demand for JPY, as businesses and individuals liquidated foreign assets, contributing to the yen's appreciation. Then reconstruction efforts started to begin. They fueled increased domestic economic activity, particularly in affected areas. This recovery process helped stabilize the Japan economy, regained its footing, and financial flows normalized. So let's see this whole event on the USD JPY chart. Here you can see the tsunami struck on 11th of March 2011. Here the chart shows that the USD JPY was already moving in a downtrend, and at that time it hit the immediate resistance level, or you can say it hit the downtrend trend line. And on the day of the tsunami hit, it got appreciated a bit. Means earlier you had to pay 83 yen to buy $1, but next day you would only require 81.50 yen to buy $1. It means that the Japanese yen has strengthened a bit. Alright, and in few days, or you can say in a week, the Japanese yen appreciated a lot, and the USD JPY fell to 77 from the level of 83. So this is around 8% off in this currency pair. Alright, but when investors and big companies and all of that evaluated the economic destruction properly, then they knew that the impact was severe. So this led to again depreciating the Japanese yen. So you can see here the rise in this currency pair. It means now after this rise you have to pay 85.5 Japanese yen to buy $1. It means US dollar is strengthening and Japanese yen is depreciating. Okay, then what happened in long term? As the reconstruction efforts began and investors' sentiment stabilized, the forex market began adjusting to the new economic conditions. Increased spending and investment flows out of the Japan contributed to gradual depreciation of the JPY. Means whatever funds have been pulled back into Japan due to that particular tsunami impact, that fund started to outflow bit by bit, reflecting the restored balance in the economy. And the Japanese yen followed its long-term trend. So you can see on this chart, this is the tsunami event. It got appreciated this much, and then again a depreciation when big players evaluated this scenario, and then again the Japanese yen and US dollar started to continue its long-term trend, which was downside only. Alright, so this is how you need to evaluate each and every factor going on around a particular event. So each event will have different kind of impact, because there is not only one single event impacting the forex currencies. There are some minor surrounding events are also happening. You see, like investors pulling funds, or if higher amount of fund Japan received to recover from that particular disaster can lead to currency appreciation. So there are many factors like this. So to get a comprehensive view, you need to understand the bigger picture and evaluate these minor events also. Then plan your trade accordingly. A more recent example of how to trade news events is October 2024. In GBP USD pair, some series of events happened that triggered a lot of volatility. So what are those? Let's see. In late September 2024, Bank of England Governor's comment. Andrew Bailey expressed concern about rising inflation due to increasing oil prices. Market participants inferred from his comments a potential slowdown in the pace of rate cuts, which negatively impacted the pound. And weak PMI data. The Purchasing Managers Index data for September showed weaker than expected economic activity, adding to pessimistic mood around the pound. In early October 2024, disappointing GDP data came out for the third quarter of 2024, showed a significant slowdown in economic growth, which led to concern about the UK's economic outlook. Then, in the last, the release of US employment data was pivotal during this period. A negative outcome from this data could have further impacted the GBP USD pair. So these events collectively contributed to the weakening of GBP against the US dollar. So let's see on the chart that how the event looked like in the price action and how much was the volatility that we are talking about. You can see here pound versus dollar 1-day chart, and it was in a very good upside trajectory from May month, and it is continuing its uptrend with small pullbacks. Alright, but what happened in this late September and start of October that it triggered this massive fall? So the events that we have discussed in the previous slide was the reason, but how it happened with the prices, you need to look at the technical aspect also. So here you see the price shot up to around 1.34 and it left away all of the EMAs, like 200 EMA is very far away, 50 EMA and 20 EMA. So these EMAs were too far, and if you look closely on this chart and if you draw a channel resistance trend line, then it shows that these multiple touches was obvious resistance levels on technical chart. So from here price struggled for around 5 days to break this resistance, but it was unable to break this, and in the end the governor's comment and GDP data, US employment forecast, and all that event triggered this massive fall. So this could be our entry here. When this minor 5-day range broken out, you could have enter on this currency pair, and it had retraced towards this 50 EMA first, and then you can draw this support line. So this support line also holded the price for few days, like around 10 to 12 days the price holded here, but the 200 EMA is also there. It has broken down this trend line and then initiated new downside movement in this currency pair. So all of that events shows you why this currency is falling, and this technical chart will show you how it is falling. Alright, so you need to focus on both of the questions, why and how, to trade market events perfectly. Let's recap quickly so that we have a comprehensive guide on how to trade news events. First is, you need to identify key news events by using economic calendars. Then you have to understand market expectations. Look at the forecast and the pre-value. Knowing these expectations helps you anticipate market reactions. Understand the trend of price with the help of technical chart, because that is where you are going to have entry or exits. Then prepare for market volatility. In such times of market events, market volatility tends to increase a lot, so you need to have a proper understanding plus a strategy to handle these high volatility. Then develop a trading plan. Point out your entry and exit points based on different scenarios. Understand and prepare for each scenario. Use risk management like stop loss and take profit orders so that you can manage that particular volatility in live market. Then analyze the outcome with the forecasted data. So that's all for this video. I hope you have the general idea of how to trade news events. Make sure to subscribe to our community channels to stay updated. Thanks for sticking around. If you found this video helpful, there is plenty more to come in our series on forex and technical analysis. And don't forget, for all your trading needs, visit thrive.com. For more in-depth trading education, head over to thrivehub.com. Thanks for watching, happy trading, and I'll see you in the next video.